Bitcoin was able to break up above our trend line once again yesterday. A little bit unsurprising here, it has had a pretty significant surge to the upside. However, since coming back into our area of consolidation right up here in this previous area of kind of resistance at 43,230 to 43,946, we started to see slippage back to the downside. Now in here, we can also see that we lost this trend line. We moved down. We couldn't find support on the 200 EMA. That is our white line there. We could not find support on the 50 EMA. That's the red line. But we could find brief support down here on that 50 SMA. So support at the moment is being found at the point of recording this video right there on that yellow line at $42,788. Okay, so we do know that we have found a bit of brief support here for BTC. Now, this most recent move to the upside and this move up slightly higher than our existing trend line is going to adjust a few things. So we're going to move the trend line up to where it is here. So we now have 2 touch points on that upper trend line. The first one being up at that high of 44,398, and then we have another touch point yesterday coming in right here at the $43,787 on this 1 hour Binance chart, right? So we have 2 touch points on that upper trend line right there, but it is still, of course, a lower high. Now, taking a look at this, we obviously do have this move to the downside, coming down slightly deeper than we were expecting the other day. And again, we can see here, if I just bring this in, that again, it's a lower low on this one as well. I'm going to go ahead and snap a line here at 41,637. That is our current swing low. So we have our swing high up here as well. I'll go ahead and attach a horizontal line there at 43,787, and so we are kind of inside this little area at the moment. Okay, now from here we can see a couple of different things playing out. Okay, we see this move to the downside actually being quite an interesting one. I'm going to go ahead and take this down to a 5-minute time frame. It's bonkers that I have to do this, but from time to time it actually makes a fair amount of sense to do so. So in here we can see that we have this interesting kind of move to the downside. Now, why I'm coming down here is to check the Fibonacci levels. Okay, I'm checking the Fib levels because I want to see whether or not we have kind of reached some impulsive trigger points, and we have. You can see here on the 5-minute time frame that we have come down to this 1.236 or 1.618 level right here. But what is interesting is that we did find a bounce right here on this 1-to-1. This coming down and this move here is more of an indication that actually we're not in a 5-wave impulsive movement, but potentially diagonal. Okay, and diagonal in its nature. So when it comes to diagonal patterns, we actually see 3-wave structures. We see kind of like a 3-wave move here. We'll have a 3-wave move up, and then we'll follow that up with a 3-wave move down, and another 3-wave move upwards, and then another kind of finishing 3-wave movement, right? And it becomes 5 waves. So the 1, 2, 3, 4, 5 like this. Usually wave 4 and wave 1 overlap. And wave 3 is 1.618 or higher of that of the wave 1, right? And so with Elliott wave theory, knowing that and knowing our 5-minute time frame here has hit this 1.618, but we have 3-wave patterns, not 5-wave patterns internally, as you can kind of see right here. And of course, even this one over this side is quite interesting as a 335, meaning that we can push up a little bit further here before we go back down. And I would expect us to kind of go down a little bit deeper in this diagonal based pattern. So it's going to be interesting to kind of see how that plays out. Now let's bring this back up into our 1 hour time frame here. So knowing that this has created some slippage to the downside, I would still look at this as a potential move up before we move down to kind of go into that wave 4, as in we're looking for that 3-wave move upwards, right? So we can see here we're finding resistance at the moment, maybe a small move down and then another move up, back up into this slightly higher range before we actually go down and finish off another 3-wave pattern coming down deeper than our existing swing low on that 50 SMA that we found support on, right? This will then allow us then to have a bigger correction back to the upside where we'll probably test the upper trend line. Now, a lot of that may actually play out over the next few hours because this is a 1 hour time frame and we went down to a 5-minute time frame just to confirm things, that essentially this is potentially going to be something that plays out very, very quickly for BTC, meaning you might not be able to trade it if you're not actively in the charts, right? And so from here we can see potential some progression back to the upside on a slightly longer time frame. Testing this upper trend line, whether this trend line will hold, I don't know, but it does look like we are likely to push up a little bit before we move on down. But a move to the downside, I think, is then inevitable. If we have a diagonal here, diagonal-based patterns only appear in a wave 1 or a wave A position, basically meaning, well, leading diagonals anyway, leading diagonals wave 1, ending diagonals would be a wave 5. So we either have a wave 1 forming here, with a wave 2 coming up towards our trend line, and then a bigger wave 3, 4, 5, or alternatively, to suit the bulls, we'd have this as a wave coming up into a B wave and coming back down into a C wave, right? So it's going to be interesting to kind of see how that plays out. We're going to basically be range bound, I think, for a little bit longer here. I don't see us with big breakouts or big breakdowns on this 1 hour time frame. Our stochastic is showing us with momentum to shift upwards. We are oversold here on the 1 hour time frame. It's not a guarantee, but you would normally expect to see some kind of recovery. I am, of course, still expecting a new local low here, a little bit deeper than 42,788, but we have to push up a little bit before we see that. So expect some volatility and expect that stochastic RSI to bounce around a little bit on this 1 hour time frame. We'll take the stochastic off, throw in the divergence indicator. Nothing has been shown here, but the RSI obviously is just below that midline. This is an indication that we are likely to see potential moves in either direction. It's quite inconclusive. So let me bring this, make this a little bit bigger here. He says. There we go. Basically, with this being where it is, we can see that downward momentum has been here. We can continue moving this RSI to the downside. It's not a problem. We haven't got any divergences indicated here, but the fact that we are in this kind of mid-range, it can go in either direction. So we can't look at this to tell us that, we're categorically going up or we're categorically going down. This one can go in both directions at this point in time. With the stochastic, though, being in the oversold area, I think it has a higher probability to probably move to the upside rather than to the downside. Our volume profiles here are, of course, still decreasing as prices pulled back a little bit. So as you can kind of see here, as price moved up, volumes were decreasing, and then as price pushed down most recently here, volumes were also decreasing. So again, we're not seeing a lot of activity in the form of BTC at the moment. Ultimately, there isn't a lot of an appetite to push the price higher, and there isn't really a lot of appetite to push the price to the downside either. So as I said, we're probably going to stay range bound until decisions are made on the market, and we actually start to see some more volatility that spikes Bitcoin's price in one of those two directions, where they're going to get that big break to the upside. And we are going to be looking for things above 44,398, or we're going to continue to go down into new lower lows, and that would be set at 41,637 or lower. So for the most part, that's kind of where they sit on this 1 hour time frame. The 4 hour time frame, of course, is in an overbought area, so we are looking for slippage to the downside in order to correct our momentum. All eyes are going to be on that 200 EMA, sat at 41,415 if we can find support in that range. We may wick down lower, but hopefully we'll close above that 200 EMA, and that will set us nicely for potentially another bounce to the upside. So on the daily time frame, we're actually down in the oversold area once again, but we still have plenty of time to actually go back down a little bit deeper. Let me make this a little bit bigger here. You can see the yellow line is basically showing us with our stochastic RSI coming down into this oversold area, right? If I go ahead and layer in our divergences here, take off our stochastics, you can see the RSI is still really high, so we can still see a lot more to the downside in my opinion here. And when we see the yellow line crossing above the white line, that's really when we start to see price reversing back to the upside. So it does look like we still have some corrections to the downside to go here on the daily stochastic. We're not out of the woods just yet, meaning that although we tapped into this higher range as expected at 43,847 to 44,651, our swing high at 44,700 looks like it is likely to hold, unless of course we start to see divergence, bearish divergence here, as we start to see momentum kind of lacking off with yet a new higher high here on the daily time frame. I'm not expecting that though. Our volume profiles, of course, are very low. They have been low pretty much during this entire move to the upside. As you can kind of see here, volumes were decreasing ever since we kind of got to the 24th of October. There were a couple of occasional spikes on the 4th of December, some selling spikes on the 11th of December, but ultimately, as you can kind of see, volumes are decreasing, prices going up. That's the kind of divergence that lets you know that we're running out of momentum to the upside, and we're likely to start to see reversals in the market. an unpopular opinion, it would appear retail investors only want the market to go up, but unfortunately that's not how things work, and we are going to start seeing some significant slippage to the downside. Now obviously if you are new to the channel, that might not be what you want to hear. If you're a veteran of the channel, believe it or not, I'm not just going to make some bullshit up and change my narrative every other day just to keep these videos interesting. I am consistent. I've been consistent for a very long time, and I do believe that we are going to see 2024, early 2024, quarter one of 2024 being a bit of a shocker for many retail investors. I do expect Bitcoin's price to come down quite aggressively, and obviously there's now a lot of other people coming out saying this, but I've been saying it for a very long time, and I do think we are likely to see it. So we've had the bear market rally here. We are looking for shifting price to the downside. We have come up higher than expected. It will mean that when we move down, we're not going to go down as low as we originally expected. The higher that you go in this case, the easier it's going to be to find support at some of these other key areas. So that's a positive news for Bitcoin and for the Bitcoin bulls and the crypto bulls. We all want to be in a bull market. It does mean that as we pull back down, because we have pushed up slightly higher than we thought we were going to, it means that we're very unlikely to, at this stage, see new bear market lows, and it's very unlikely that we're going to see $20,000. Of course, is possible, and as we kind of push up higher, it becomes harder and it becomes less probable that we do have those $20,000 Bitcoin lows. With that being said, my key areas at the moment are, as you can see right here, with the main one being right here at $30,000 to $32,000. Above that we have the 35 to 37, and then above there we have basically the $39,600 to $40,000. So I do expect us to move down more towards the 30k area. If we can't hold this, then we are talking 24, 26k, but it'll be interesting to kind of see how all these things do play out. Now, as we kind of scale this up into the weekly and the monthly, this is really where the bearish scenarios are really, really clear to us, right? And so, although we can see potential rallies on the daily time frame, the 8-hour time frame, the 1 hour time frames, right? All these kind of smaller movements, the bigger macro picture is being very, very bearish, right? And so, as we can see, we're up in this overbought area. We are looking for moving to the downside here. So we are just coming out of this overbought, and we are going to be looking to slip to the downside. Now, the last time that we were this overbought was over here, and we saw a correction of 20%. So a 20% correction from our current high puts us down at the $35,000 level, right? As we can kind of see right here. Now, but because the stochastic RSI is not an indication as to your price expectation, it doesn't relate to price, and indeed you don't have the same kind of reaction every single time. It's all about momentum. Is there backers behind this move or not, right? And so the time before this, we actually went from this high to this low at 27%, and then we had the same stochastic RSI correction. The time before that, we had a very, very deep correction coming down all the way 63%. Okay, so as you can kind of see here, the lowest side of this correction was 20%. The time before that was 27%, and the time before that was 67%. Okay, now if we were to see a 27%, we are talking about $32,000. Hence why this is a key area for me. And if we were to come down to 40%, which is a pretty typical correction back in 2017 for Bitcoin, that puts us at 26k. And if you have one of those really extreme scenarios where you have like bigger corrections, 55% gets you to 20k. Now, these are all scenarios that can play out. We might not want them to. We might not want to acknowledge that they exist, but we are in that territory where we're going to be seeing very significant corrections for Bitcoin and for the crypto market. And this is a huge opportunity, and I want to stress that it's an opportunity. This isn't something to be feared. This isn't something that you kind of pulling your hair out unless you've invested way more than you can afford to lose, right? And this is one of the key things. You hear these sayings all the time. Never invest more than you are willing to lose. Not your keys, not your... You hear all of these things, right? Buy the fear, buy the dip. All these things, they all have kind of some kind of meaning behind them, right? And so when we say, if you're kind of really fearful or pulling your hair out, you're stressed out because of the correction here for Bitcoin and for the crypto market, then you've overexposed yourself. You've invested more than you're willing to lose. Now, for most people who understand, that you only really want to invest what you kind of spare capital that you can afford to lose, then that essentially puts you in a different frame of mind. such as myself. I'm not going to be liquidating all of my assets up here in this higher range, trying to buy it back cheaper, because at this point in the cycle, I believe that is a higher risk opportunity than it is to basically just work harder, multiple jobs, get as much fiat as you possibly can, to then add more to your position as you have that correction. So as we kind of see either a 20%, 26%, 40%, 50% correction, whatever that ends up being, it is an opportunity to add more to the market, because this correction, whatever level it happens to be, wherever it ends up landing, is going to be one of the biggest opportunities before the next bullish market really kicks off. Okay, because what happens after this are some very, very insane, crazy gains. Now, what we've seen so far in terms of all of this really poor performing Bitcoin chart, and what I mean by that is, yes, we've had some decent percentages here, but it's poor performing because we have a lot of overlap going on, right? We can see we pushed up and we had a correction down here of 19%. We then pushed up and then we had another correction here of 20%. We pushed up a little bit and then we had another correction here of 21%. And then we've pushed up most recently from here, and there hasn't been a correction yet. So we've gone up another 79%. But the reason that this is a poor performing market and not really overly that bullish is if you take a look at where you were previously, after you have those initial kind of surges, you can see a lot more increases, right? More sharp increases, where we haven't had a sharp increase yet. We've seen increases for sure, but they haven't been massive surges like we had seen previously. And of course, you can take a look at multiple of these cycles to really see these much sharper increases in price. Now, in 2017, we saw a lot more corrections than we did in 2021. 2021 was obviously held up by a lot of extra printing in the US and all that kind of stuff. But for the most part, what we've seen so far is a very choppy kind of move to the upside. So it hasn't been the best price action, and we've moved up 188%. And if in relation to previously, where we had the November or December 2018 lows up to the highs of June 2019 was 344%, right? So we know that we've really kind of not had the best performance in this move to the upside, very corrective short-term movements. So this opportunity is that when we have this correction, whether it's 50%, 40%, 30% or 20%, is an opportunity to get in before we have those real big surges to the upside. Something similar, I guess, from September up towards maybe, November, December time. So that couple of month period there actually is a reasonably kind of what you would expect to see, but on a much grander scale. So, as I said, we all kind of want to be in a bull market. It's all great and all that kind of stuff, but this is where the money is going to be made here in adding and dollar cost averaging your positions into this correction, whether that is 20, 30, 40 or 50% correction, right? It's up to you guys as to kind of where that lands and ultimately where the market feels that that's going to be finding good value. Ultimately, I think we will be testing the lower side of this, simply because if we check on chain, there isn't a lot of backers with large positions just yet, and I expect them to come in a little bit later onto Bitcoin. Now, on the monthly time frame, it's a very similar story. We're heavily overbought here. The last time that we were this overbought, we were up at $65,000, and so we kind of know what happened here, right? And we're not talking about a 76% correction, but I am expecting a pretty significant correction to the downside. And if we can get to 20K because we can't hold 30, then that's going to be an absolutely insane opportunity, because we know that there's a good strong possibility that that is likely to hold out. Now, as I kind of zoom out of here, you can see that I've connected to the higher highs and the higher lows across multiple years, and you can see that we have yet to test this lower trend line, this curved trend line here. Well, we could see this potentially coming down and testing in 2024. If we were to see a double bottom scenario at $15,500, that's going to happen about July 2024. So if we were to see slippage that deep, that is a significant area of support to be found right there. And anything later than that is basically going to be not a new lower low. So we might find that you find good support at some of these existing lows towards the end of 2024, which basically basically might mean that 2024 is not a positive year for crypto, and it actually goes and lasts a lot longer, this bearish time. If that is the case, and then 2025 is going to be the next big surge to the upside, it's going to be a huge opportunity. It does mean that you potentially have an entire year here to be building your positions and getting yourself ready for that next big run to the upside. Let me know what your thoughts are on all of this in the comments below. I've kind of rambled on for about 20 minutes now. I know this is a lot to kind of take in. If you have found it useful, smash the like button. If you're new, subscribe. If you've made it to this point in the video, well done, you guys. I appreciate that. And I will catch you all in the next one.